Can I address the giant stock market bubble, or the idea of how inflated the stock market is? I have a couple of times in the past, but I'll dust it off a little bit. And yeah, in the 70s, 1974, companies couldn't keep all of their promises. They realized they weren't going to be able to keep all these promises to all these employees. Companies have a nasty habit of doing this, of saying, yeah, come work for us, and we're going to give you all this stuff, and it's going to be awesome. And then they find out that they have no way to actually make good on any of those promises. And so because the company pisses all the money away, or they get told to pay out more dividends to shareholders and so on. This is that Dodge Brothers versus Ford argument. And they switch to a defined benefit, or switch from a defined benefit pension to a defined contribution pension. Defined contribution pension means that you have to put money in. So you put money into your 401k or your IRA, whatever it is. But then that money has to go somewhere, right? And it just got shoved all into the stock market. And so you had a bunch of companies that should never have had market caps as high as they had. That their book value is like maybe $5 million, but then they have $500 million of investment capital. And they start expanding and expanding and expanding because they can. And what is supposed to happen in an actual free market, what would happen is that expansion would run its course. And then there would be no more people to support any of that expansion. And then they would close down and go out of business, which is what a lot of big companies are supposed to be doing right now. And many are, but it's supposed to be even more. It's supposed to be a bigger bloodbath than it already is. Many of these companies are getting propped up with large S and so forth. If there were no more government spending, really, I mean, like most companies would be out of business in about 6 months. Probably not even that. In fact, many companies would be gone in about 3 months. They go about 90 days and they're gone, right? Because there isn't enough demand to support any of this stuff. So when you had lots and lots of small businesses, and of course the small businesses got driven out of business because the big companies kept expanding with all of this newly acquired investment capital. And the argument is that, like, this is the loser-tardian argument. It's like, well, it's good. It brought prices down for everybody. It made everybody's lives better. Yes, it did. I agree. But now you're not letting it collapse. Now you're not letting it collapse like it's supposed to. Yeah, you did that. You wiped out all the small businesses. You know, you had a bunch of companies running their profit margins so low that they couldn't actually, that on paper, you really can't make those companies work like that. Anybody who's been in business for any length of time knows that you can volume yourself out of business. There's a balance. And when companies say, well, I've just got all this investment capital, so we can just lower prices no matter what, and it's great for the consumer. Like, yeah, I guess that's one way to look at it. But, okay, what happens when you run out of enough people to support all of that? Well, you're supposed to go out of business, right? You're supposed to start downsizing and eventually go out of business, especially if you did this huge expansion. And then, of course, then it drops the stock price, which collapses the stock market, which makes all those investors poor, and on and on, which is what's supposed to happen. That is a natural course of events in a normal free market economy. We don't have that because enter the idea of money printing and the government, and then the government just saying, yeah, hey, we need to buy this and buy that. And it's like, see, look, there's all this demand. This is the argument between a command economy and a demand economy. And I did a video on this about, 2-3 weeks ago, something like that. The difference between the two types of economies. You know, like, okay, a demand economy is the government says, go build unto me a city, and, you know, whatever, right? Like that's a command economy, you know, make it so, you know. And a demand economy is actually supposed to be what the market wants. What is the market? The market is the people, okay? The people are what's supposed to be driving the market, not government spending. This is Keynesianism metastasizing. The idea, because Keynes's idea was, hey, if consumer spending went down, then government spending should go up a little bit to adjust. So that way these companies could continue to survive. It sounds good in theory, but that's not a good idea, because you're trying to create what's called a flat line economy. And a flat line with something that's alive or supposed to be alive is not good. Right? Okay, we've all seen ER. We all know how, we all seen the movies. We've all been to the hospitals and such. You hear the beep, beep, beep. You know, yeah, that means you're alive. That means up, down, up, down. That's an EKG, right? It's you're alive. That's movement. A flat line, That's bad. That's really bad. That's super. Nothing else matters at that point. Okay, like everything else, forget it. Nothing else matters. So yeah, you don't want to have a flatline economy. That's why. So the idea. So Keynes's theory was like, okay, well, yeah, this will even it out. No, you don't want even, and you don't want a flatline economy. You want booms and busts, or actually, you want booms and corrections. Is the way I would explain that. You want that. That's actually very healthy, because that's actually what does purge the market of bad investments and bad ideas, right? There's lots of bad ideas out there right now that are still around, even though they're really goddamn bad ideas, and they don't, and the market doesn't want them. The average, like, think about it. How many people right now, let me just give you an example. How many people right now in this world would love to have cars that don't have a bunch of crazy tracking shit in them and using 16 gigs a month of data? Lots of people were like, dude, I'd rather just have a regular car that has AC and I can get to and from work, and it doesn't cost me, like $100,000. That's what the market wants. That's not what the governments want. That's not what, like, they need you to, like, no, we need to have more spending and bigger price tags and everything. Yeah, it always has to be up. Everything has to be up because that's what you've centered your fake economy around. So yeah, that's the problem, and that's why, for example, for those of you out there that are the guys that kind of follow Warren Buffett, I realize that Buffett is retired as of I think last week he retired, but there's a reason why that they're sitting on all these hundreds of millions of dollars, because there's no good investments, because none of the investments have any fundamentals to them. It's just number go up. That's it. There's no rhyme or reason to it. There's nothing about it. I mean, like, this is decades of experience talking and investing. Like, this is just, that's why the real pros, right? The guys who really knew this stuff. Okay. Not that I don't bill myself as an expert. I'm just telling you. A year and a half ago, I did a video in which I told landlords, I said, dude, you guys better sell these houses now before everybody else runs for the exits, because the numbers, the fundamentals don't match up with any of this. And I got trashed by everybody on this. I told you guys to do this a year and a half ago, that this was coming, that the numbers didn't match what you were paying for these properties, and they can't match, and they don't match the birth rates. They don't, like, none of the fundamentals match any of this. It's the math catching up. And I tried explaining this, for a long time, and I got nothing but a bunch of grief from people. Well, and by the way, on TikTok, you can scroll to the bottom, way down on my account, and you'll see that video. It's got, like, I don't know, 2.5, 3 million views or something like that. And you can read the comments of people saying, oh, you know what you're talking about, you're stupid, blah, blah, blah. Like, dude, I can do math, and the numbers don't lie. The numbers tell a very real problem. And so, yeah, in the stock market, to answer your question, the person who asked me, is that, yeah, it's overinflated. It has been for a very long time. It needs to correct. Now, that they're doing everything they can to make sure that correction doesn't happen. They don't want a big correction. That's why you have the orange messiah. The stock market's going to go even higher. Look at that stock market. Oh my God, it's number go up. Printing $4 trillion will do that. Like, what, as of 2 days ago, they want to print $4 trillion. By the time it gets there, it'll be $8 trillion. Who the hell knows? It's just money printing, and it's just government saying, we need to buy this and buy that. It's artificial demand. It's artificial demand. It's not real demand. The real demand is a completely different video.